Is investing in Denver real estate still worth it in 2025? Hello, it's Closset here, your trusted Denver real estate expert. If you've been thinking about buying an investment property in Denver, you might be wondering, is it still worth it in 25? Home prices are high, interest rates are volatile, and the inventory remains pretty tight. But at the same time, Denver continues to attract new residents and companies year over year. In this video, I'm going to break down the current state of the Denver market, the pros, the cons of investing right now, and how smart investors are adapting to today's conditions. Let's dive in. The Denver market as of 2025, what has changed? Home prices. As of early 25, the median home price in Denver was right around $600,000, up slightly from last year. While the growth has slowed compared to 21-22 COVID time, the market has stabilized instead of, basically crashing. Rising rents. Rent prices have steadily increased across Denver, especially in desirable neighborhoods like Rhino, aka River North, Sloan's Lake, and Capitol Hill. The average rent for a one-bedroom is now around $1,900 to $2,200 a month, making rental income more attractive. Inventory levels remain relatively lower. They have crept up over the summer here, but they're still overall pretty low. But we are seeing slightly longer days on market and more price adjustments than the previous years. Mortgage rates. Interest rates, early part of 25, were hovering around 6.5 to 7%, which is definitely higher than pre-pandemic levels, but not unexpected in today's economy. Number two, why investors still see opportunity in Denver. Job growth and migration. Denver continues to draw tech, aerospace, healthcare, and remote workers. The city's central location, outdoor lifestyle, and strong job market make it a long-term magnet for talent. High rental demand. With affordability becoming a challenge for buyers, more people are renting, creating consistent demand for well-located rental properties. Equity growth over time. Denver has consistently outpaced the national average in appreciation levels. Even with slower short-term growth, the 5 to 10-year outlook remains strong. Short-term rentals. Well, regulated as of late, big time actually, short-term rentals like Airbnbs and Verbos can still be profitable in the tourist-friendly areas if permitted by local zoning. Number three, what types of properties are performing best in 25? Small multifamily, 2 to 4 units. Duplexes and triplexes remain investor favorites. They provide better cash flow and diversification than single-family rentals, and they're still eligible for residential financing. The house hacking properties. Owner-occupants are taking advantage of FHA and VA loans to buy multiple units, live in one, and rent out the rest, offsetting the mortgage cost and also building equity at the same time. Turnkey versus value add. Turnkey properties are easier to manage in today's higher rate environment, even if cash flow is a little tighter than usual. Value add properties. With cosmetic issues, they are, pretty savvy to investors on fixing up those little small needs and fixes, but basically seeing the best for your returns with value add properties, especially with paired and long-term holds. All right, number four, what to watch out for in 2025? Tighter cash flow margins. With high purchase prices and interest rates being at around 6.75 to 7%, this can really affect your cash flow. It's definitely thinner than in the previous years. You'll need to analyze these deals carefully and avoid overly being optimistic about rent projections. Stricter lending standards. Lenders are looking more closely at borrower reserves and debt-to-income ratios than ever before. You may need to bring more to the table or shop around for investor-friendly lenders. Denver's short-term rental regulations, otherwise known as STRs. They're heavily regulated in Denver proper. You must live in the property full-time to legally rent it short-term. Neighborhood cities may have different rules, but always check with the local ordinances. Maintenance and property management costs is a big consideration. With older homes, the housing stock in areas like Congress Park, Baker, West Highland, make sure to budget for deferred maintenance expenses. They're going to show up. A lot of these homes were built in the early 1900s. Number 5, how to make Denver investing work in 25. Get real about your goals. Are you looking to cash flow? Are you searching just for the appreciation gain? Or are you doing kind of a hybrid, a little bit of both? Your strategy should guide the type of property that you'll buy and how long you plan to hold it for. Partner with local experts. I work with investors every day, from out-of-state buyers to Denver-based landlords. Having the knowledge, not to mention I've had my own rental properties as well as even currently. And this dates back to 2000. I definitely know how to handle rental properties. It breaks down about the neighborhood, your cap rate. There's all kinds of specifications and stuff that goes in the deal to make sure that that investment works best for you. Explore creative financing. Seller financing subject to deals like using HELOCs or existing properties that can help seasoned investors expand even when money's pretty tight in this current market. So in conclusion, is investing in Denver real estate still worth it in 2025? Yes, but only if you approach it with the right strategy. The days of easy deals and sky-high appreciation are over, but Denver still offers long-term growth, strong rental demand, and smart investment potential, in my opinion. If you're ready to invest in Denver or you want help analyzing your next move, I'd be happy to guide you through it. Don't forget to like, subscribe, and hit the bell for more Colorado real estate insights. We'll see you on the next video. Thanks.